Welcome to GraceKennedy's Investors Briefing on our 9-month interim report. I am Don Wehby, Group Chief Executive Officer. With me is Frank James, Group Chief Financial Officer. We welcome all participants who have joined us via the internet for this audio conference. This briefing has been scheduled to run for 40 minutes. We will use approximately half the time to do presentations by Frank and myself, and the remaining time to accommodate your questions. During the question and answer session, you are welcome to share your questions by emailing us at gkinvestor@gkco.com. Let me repeat that, gkinvestor@gkco.com. You may also call or send a text to our communications team at 876-809-1121 or 876-809-0464. I'll repeat those numbers again. 876-809-1121 or 876-809-0464. And thank you very much, everyone, for joining us again. Let me start off by, again, welcoming all the listeners to this Investors Briefing, and to say that the 9-month period for the GraceKennedy Group, our performance was very good. Our revenues of $66.7 billion, up 11.6%. PBT of $5 billion, up 62%. Our profits after tax, we reported $3.7 billion, up 54.6%. I must say that included in those numbers is a one-off gain. Without the gain, our profits would have been up 37%. I will ask our CFO, Mr. Frank James, to expand on that one-off gain. And for the first time in GraceKennedy's history, I'm happy to say that we have rewarded our shareholders with $1 billion Jamaican dollars in dividends. So we are very proud that we were able to achieve that feat. All business segments showed an increase in revenues, and 50% of our revenues, approximately 50% of our revenues, were generated outside of Jamaica and 50% inside of Jamaica. Our Grace Foods USA company continues to show really good improvement. Both the Grace brand and the Lafayette brand showed growth. For 2017, we'll be investing very heavily in both brands to ensure that we build on our brand equity, and we are very confident that the momentum and the growth that you're seeing in 2016 will in fact continue to 2017. You'll also note from a previous report that we have made our first shipment to Puerto Rico, a market that we think will be expanding quite rapidly. In fact, some supermarkets in Jamaica, you will see our Lafayette brand in the frozen section with the mixed vegetables, and the feedback that we've been getting from our market areas out there is that it's doing quite well. Grace Foods UK, early days since Brexit, but both revenue and profits are growing quite nicely. We are extremely pleased about the performance of our Grace Aloe drink. The Grace Aloe drink is now in the top 10 in terms of UK juice brands. Europe continues to perform well, Germany, Holland, and France, and in fact, we're having a strategic discussion internally now where there's a strong possibility that GraceKennedy will be setting up GK Europe in 2017. Ghana, as part of our African expansion strategy, did very well for the first 9 months. We saw revenue growth up 86%. While the base may be low, we think the momentum is there for the continued good growth of our business in Ghana. And in fact, also being discussed is whether we should start a small manufacturing entity in Ghana. GFS, our local food business, also did very well. We saw double-digit growth in revenue, and our main products are continuing to do well. And I'd like to use this opportunity to really thank our Grace customers in Jamaica for the continued support and loyalty to our Grace brand in Jamaica. Another real performance that we're happy with is our manufacturing company. They continue to do very well based on the increased demand for our products both internationally and locally. I'm also happy to announce that Tropical Rhythms, which was previously manufactured in the USA for the US market, We have now brought back that manufacturing to Jamaica, to our own factory, and that is also doing very well in terms of producing just over 200,000 cases of tropical rhythms. We have also mentioned previously that Arizona, one of the most dynamic beverage companies in the world, as our strategic partner. Our revenue in terms of tropical rhythms and beverages in the United States market is growing quite nicely, and I must thank Arizona for their support. And I'd like to also say that Arizona products, or some of the Arizona products, will be now produced in Jamaica in our manufacturing plant. Hilo, hopefully some of you would have seen our new Hilo store in Ligani, continues to do very well. We have now renovated to date 4 stores, and in fact we're opening our Wehby store tomorrow evening as the 4th store. So we are very happy about that. Our next Hilo expansion or renovation is going to be actually in Portmore, where we're going to be investing quite heavily in renovating that store. And included in our integrated retail strategy, First Global Bank will also be included in the Portmore Hilo store. First Global Bank also opened a new branch in Ligani, and again as part of our integrated retail strategy. We'll also be opening at that same location a Western Union and a Bill Express during the first quarter of next year. One of the recent announcements that GraceKennedy is certainly very, very happy about is that the regulations for agency banking was recently passed in the upper house. We're extremely happy about that. If you think about our strategy, and we have been saying it for quite a while, that Western Union, we have over 150 locations, and it is our plan that some of these locations will in fact be converted to agency banks. And we refer to that strategy certainly for First Global Bank and Western Union as a game-changing strategy going forward. And we're going to be dedicating a lot of resources to ensure that we are the best in agency banking in Jamaica. GKMS, we are currently in 11 countries. We recently started Cayman. Cayman is doing extremely well for us, and we're hoping to announce very shortly the startup of our 12th country in the Bahamas. Our insurance business, again, doing exceptionally well. GKI, GraceKennedy Insurance and Allied. One of the innovations that is working very well for us in terms of technology and digital is GKG Online. We now have over 1,000 customers using our GKG Online. Customers as far away as Mexico and Australia. So Jamaicans, we're all over the world. Mobile banking will be launched very soon, pending approval by the BOJ. And basically what this is saying that you can pay your bills using your mobile wallet at Hilo and other merchants. Our target for the first couple of months in terms of signing up merchants is 100 retailers. For the 9 months, we're also very proud and pleased about our role in corporate social responsibility. We have dedicated, we have spent $17.5 million in terms of sending children to the universities in Jamaica. Also, the Bob Marley Music Room, the foundation, partner with the Marley Foundation at our STEM Center in Paradise Gardens in downtown Kingston, and also that is doing very well. So the GraceKennedy Group, I think it has been a very, very positive 9 months for the group, and we are very pleased with the performance of the company. We expect our 4th quarter to continue to be good, and we are now focusing on 2017 to ensure that we have sustainability in terms of the performances in revenue and profits. I'm now going to hand over to our group CFO, Mr. Frank James, to give you some more details about the numbers and the performance of the group. Thank you very much, listeners.
Thanks, Don. I'll start with the income statement. Please note, listeners, that the income statement is broken into continuing operations and discontinued operations. Discontinued operations represent hardware and lumber, which, as you know, we divested at the end of 2015. So I will mainly speak to continuing operations unless otherwise stated. As Don indicated, our revenue is up 11.6% or $6.9 billion, with all 4 segments showing double-digit growth in revenue. Pre-tax profits and net profits from continuing operations were up 62.3% or 1.4 billion, with net profits for the overall group, that's including discontinued operations, up 54.6% or 1.3 billion. 3 of the 4 segments showed double-digit growth in profits, and 1 segment declined in profits. As Don indicated, and as we have previously reported to the market, a non-recurring non-cash gain was realized on the dissolution of some non-operating subsidiaries. This represents, for the most part, the transfer of the foreign currency translation adjustments of the net assets of those liquidated foreign subsidiaries from other comprehensive income to the income statement. Without this gain, net profits from continuing operations would have been up 44%, which really reflects strong performance, particularly in our food trading, money services, and insurance segments. To give you a little more detail on revenue, the largest contributor to revenue growth was the food segment, contributing 5.1 of the $6.9 billion in growth. This reflected growth both in Jamaica and our international markets. And interestingly, our Jamaican market has actually grown faster at 13.3% versus 8.5% for our international food markets. Our food distribution business in Jamaica was able to attract new third-party principals, particularly in beverage distribution, which added significantly to our revenue. In addition, a number of our key traditional products such as cheese, coconut milk powder, Vienna sausages, corned beef, etc. contributed meaningfully to revenue growth. Of note is our high-low supermarket chain in Jamaica, which saw strong growth in revenue from our newly refurbished stores, Barbican and Manor Park in particular, as well as the newest addition to our chain, High-Low Ligani. In our international markets, revenue growth was supported by our U.S. food business, delivering 16% growth with both the Grace brand and the Lafayette brand growing revenue as we continue to build out our distribution in key retailers in the United States. While all our international food businesses grew revenue, I would highlight our Canadian business as well, which grew revenue 11% as we continue to cross over from the ethnic into the mainstream food markets. Turning to our insurance segment grew revenue at 10% or $407 million, with our broker in Jamaica, Allied Insurance Brokers, growing over 40%, driven by increased cover and earnings on existing business as well as new business. And our underwriter in Jamaica, GK Insurance, also growing revenue with its growth in its liability and special risk and engineering portfolios. While we continue to grow the number of policies in our property and motor book, revenue continues to be under pressure from lower premium rates in the industry. As we continue to grow our regional insurance business as well, we are pleased with the double-digit growth in both our St. Lucian underwriter, EC Global, and our Turks and Caicos broker, GK Insurance Brokers. Our banking and investment segment experienced good growth in revenue of 13%. This growth is attributed to growth in First Global Bank's loan portfolio, which grew 12% year over year, as well as growth in our investment banking subsidiary, GK Capital Management, which closed a number of significant corporate finance transactions over the 9 months. Finally, on revenue, I must highlight our money services segment, which grew revenue just under 20%, with our traditional large markets, Jamaica, Trinidad, and Guyana, all showing strong double-digit growth, and new markets such as Cayman contributing meaningfully to the revenue for the period. We continue on our path to becoming a global consumer group, with revenue from outside Jamaica representing just shy of 50% of total revenue. This is represented by North America at 25% and Europe, including the UK, contributing 16%, which you will note both exceed our 2020 vision target of 15% each. Africa remains under 1%, but returned to growth this year, and as Don indicated, had some very strong growth for the year in Ghana. This strong revenue growth came with even stronger growth in profit for the group as expenses grew slower than revenue, increasing our efficiency ratios. I indicated earlier that one segment saw a decline in profits. This was the banking and investment segment, which declined 26%. Profits at First Global Bank were impacted by investments in technology and our branch network, with the opening of our Ocho Rios branch earlier in the year and the relocation of our Ligani branch in the third quarter. As technology continues to revolutionize banking, we believe that FGB, as a leading technology bank in Jamaica, is well positioned to take advantage of this change in the industry. And so we continue to invest in this digital transformation to bring greater convenience and security to our customers. We believe our customers will reward us, and FGB has actually seen deposit growth of 32% year over year. Our food segment almost doubled profits, moving from $609 million for the corresponding period in 2015 to $1.2 billion for the 9 months in 2016. A primary contributor was the improvement in performance of our food business in the United States, reflecting a recovery from the integration and transition costs faced in 2015, as well as improved efficiency and revenue growth. Our manufacturing businesses also contributed significantly to profit growth with improved volumes and margins. Our insurance segment grew profits 40%, driven by the strong revenue growth in allied insurance brokers. GK Insurance, on the other hand, experienced higher claims over the period. We are also very pleased with the money services segment, which grew profits 30%, or just over $500 million on the back of strong revenue growth and improved operating efficiency. Moving to the balance sheet, our total assets increased by 12.8%, or $13.9 billion, to over $122 billion, driven largely by strong growth in investments and loans by First Global Bank, as well as growth in receivables. We continue to manage very carefully our working capital position through the close monitoring of both our receivables and inventory. On the liability side, First Global Bank also had strong growth in deposits, as mentioned earlier. The group saw a reduction in debt, moving the group's debt-to-equity ratio from 37% to 32%, which remains low, leaving adequate capacity for funding of future growth. We continue to seek to improve shareholder returns, and as we grow profits, we have shared that growth in profits with our shareholders in the form of dividends. As Don mentioned, we will pay a third interim dividend on December 9th, which will see dividends paid to that point in 2016 crossing the $1 billion mark for the first time in GK's history, representing an increase of over 23% compared to the same period in 2015. This will reflect a dividend per share year-to-date of $1.02. Shareholders will recall that we had a 3-for-1 stock split effective August 2016. As such, on an equivalent basis, that $1.02 would compare with 83 cents for the same period in 2015. In addition to this growth in dividends, the GraceKennedy stock price has increased by over 50% for the year. We continue to reinvest in our business for growth, investing over $1.8 billion in capital expenditure up to the third quarter 2016, including over $500 million refurbishing our high-low supermarkets, over $400 million improving our manufacturing and distribution facilities across Jamaica and the United States, over $250 million implementing new software and technology to improve operating efficiency, controls, and to better serve our customers, and over $200 million implementing state-of-the-art teller machines and renovating our First Global Bank branches to improve access and convenience for our FGB clients. In closing, the group's total equity position continues to be strong, growing by $4.2 billion to over $43 billion. Over to you, Don.
Thank you very much, Frank, for that very comprehensive report on our financial performance. There are quite a few questions already coming in. The first one is from Aleem Khan, a journalist. I suspect, Aleem, welcome. I suspect Aleem is from Trinidad. Is Trinidad and Tobago now a net sender of remittances to what territories? Trinidad and Tobago traditionally has primarily been an outbound market. However, recently, because of our strong promotions in terms of the USA market, the inbound and the outbound is just about the same. So Aleem, net sender, it's about equal now in terms of inbound and outbound. To what territories? Is it traditional territories for Trinidad and Tobago, the USA market, the UK, and also Canada. Don, you mentioned that the dividend payout is $1 billion, but that the yield is 2.4%. Can your CFO address the strategy in terms of increasing the yield?
Thanks, Don and listeners. We are always seeking ways to enhance shareholder value, And we do this through a combination of returning cash to our shareholders in the form of dividends, as well as reinvesting in the business for growth. So as I mentioned, we have actually grown the dividend this year so far by 23%, because we have been able to generate those additional profits. But in fact, the even greater growth has come in the appreciation of the stock price, which has gone up over 50%. And we think that that largely has to do with the types of investments that we have been making in the business. We recognize that when we reinvest in the business, it can have a short-term impact on profits. And over the last few years, that's what we have been doing, making material investments. And we think that is what is paying off and showing in the profitability that we are seeing this year and we expect to see going forward. And therefore, we're happy to share that growth in profits with our shareholders.
Thank you, Frank. Aleem, again, our journalist, Khan. How has the food business been performing in Trinidad and Tobago? Aleem, we have been performing pretty well. We are seeing steady growth in the Trinidad and Tobago market. So we're quite happy with our performance in Trinidad and Tobago. Are you looking, and it's Aleem, are you looking to enter any new segments, maybe commercial banking in Trinidad? Aleem, the answer to that question is yes. We are actually hoping to enter commercial banking in Trinidad. We have been having initial discussions with the central bank in Trinidad, and the discussions will continue. But as a Jamaican company trying to expand in the Caribbean, we believe that we have a core competence in commercial banking. And we are hoping that the regulators in Trinidad and Tobago would look at us favorably in the future to start a commercial bank in Trinidad and Tobago. Recession difficulties facing many Caribbean countries. How are you able to grow profits in this environment? Exclamation sign. That's a great question. So if you look at the GraceKennedy Group in terms of our profitability, we have our strategy, and let me back up a little bit in terms of our vision. The vision for the GraceKennedy Group is to achieve 50% of our profits outside of Jamaica, 50% of our revenue outside of Jamaica, and to leverage our relationships with our international partners. And that's primarily Western Union, who, as I said earlier, we operate in 11 countries as a strategic partner, and hopefully 12. The distribution of our profits of that 50%, we are now at 38% outside of Jamaica, and a lot of that is generated from our food business in the UK, in the US market, and in the Canada market. Also, our remittance market in terms of the USA also contributes to that profitability. One of the things that I'd say is there's always opportunities while the Caribbean economies are difficult, as you said earlier. But in fact, the GraceKennedy Group on a whole, especially in our remittance business, is performing exceptionally well in the Caribbean countries. You know, so we see a lot of opportunities, and we're going to be working hard in terms of our strategy to deliver on the profitability.
Don, I just add that we also focus significantly on our operational efficiency in all our various businesses, and to ensure that we take advantage of some of the positives in the Caribbean economies now when you think of the reduction in oil prices and the fact that those have remained relatively low compared to prior years. Those are some of the areas where we make sure that we capture those efficiencies to benefit our profit line.
All right. Thank you, Frank. Other question, was the AgroGrace name sold as part of H&L? No, the brand is still owned by the GK Group under license, and it's presently being used by Hardware and Lumber, and that arrangement will be reviewed on an ongoing basis. So GraceKennedy, we still own, and it was not sold as part of the H&L transaction. Other question is FGB. What is FGB's strategy? You're going to be seeing increased competition going forward. How are you going to position First Global Bank in such a challenging market? So as I said earlier, we have looked very carefully at First Global Bank, and we have been executing well on our strategy. Basically, we want to be the bank of choice and convenience for the Jamaican consumer, and you can see that through our flexible banking hours that we have. So if I was to probably summarize some of the key strategic initiatives of First Global Bank going forward, the first one I'd mention is the agency banking. We believe that we have a real competitive advantage in terms of our Western Union network and the new regulations for agency banking. The second competitive advantage that we think is our digital banking. We introduced the video teller machine and it has been doing exceptionally well. Over the last few years, we have invested over $7 million in new technology, and we are beginning to see the benefits of that investment. Also, invest in our people. We believe that if we are going to be successful in banking, we have to have the best people, and I can say to you that First Global Bank will have a great team in place, and we are going to be very focused in terms of executing on our strategy. Okay, has any consideration been given to greater use of long-term debt in light of where interest rates are now? Frank?
Thanks, Don. Yes, the group is always looking at ways to manage our cost of funding, and given the relatively low interest rates in Jamaica at this time, the use of long-term debt is definitely something that we'll be considering. Of course, this will be based on our need to raise debt at the appropriate time. And as I mentioned earlier, our debt-to-equity ratio remains low, giving us adequate capacity to increase debt as we need to.
Don, you mentioned international listing of the GK Group. Can you give us an update on that? I'll ask Frank to update us on the international listing. Frank has been the person that I've asked to lead on that initiative.
Thanks, Don. As we had indicated, it's not a short-term initiative, but it continues to be one that we continue to research, and it would definitely be something that would be considered in the medium term. So we continue to do work on the consideration of an international listing, if appropriate, for the GraceKennedy Group.
Okay, thanks. I have a question here from Dashawn Hendricks, who is from TVJ. Will GK be using agency through GCARES location to expand FGB? Absolutely, Dashawn. That is our plan. We have 150 locations, and we believe, as I said earlier, that is going to be a real competitive advantage for the GraceKennedy Group, where we will be expanding through our GCARES network, our agency banking with FGB. De-risking of correspondent banks, how is that impacting the GraceKennedy Group and the bigger issue of Jamaica? Again, I'm going to ask Frank James to address the issue of de-risking of correspondent banks.
Thanks, Don. De-risking, as you would be aware, is a matter of international concern. It is one that we are monitoring closely. However, we are fortunate to be in the position where, in our partnership with Western Union, we have been able to leverage that relationship to manage through those challenging times. We have also, as a group, always focused on compliance as a very key area of our strategy, actually something that we have viewed as a competitive advantage. So we have reinvested and invested heavily in compliance, and we think that puts us in good stead to continue to manage our banking relationships in this period of de-risking.
Thank you very much, Frank. Don, devaluation of the Jamaican dollar. What are your thoughts? Well, that's a good question, and that's a question that we often discuss here at GraceKennedy in terms of the devaluation of the dollar. Just to put it in context, the dollar has devalued by 6.7% for the year to date. I think if you look at our inflation number, it's probably just about 1.83%. We certainly at GraceKennedy, and we have done the numbers, we don't believe there's any reason why the Jamaican dollar should continue to devalue. We believe the dollar is at a very competitive rate now. We believe the fundamentals are in place. I think if you look at the recent growth numbers, which were very encouraging, we also believe that the growth, the 5 in 4 growth, if we focus on it as a nation, we can achieve that growth rate. And with the standby IMF agreement should add confidence to the financial market. So to answer your question in terms of the devaluation of the Jamaican dollar, we believe that, as the governor of the bank said and others, that we expect stability of the dollar going forward. Another question here. Is GKMS currently working on expanding in any new markets? The answer to that is that we are always, through our Western Union network, looking at opportunities to expand in other markets. And I'll give you an example. When I defined the global consumer group as leveraging the relationship with our international partners, if you think about it this way as one example, is that GraceKennedy, we are now in Africa. We are now in Ghana with our own offices, our own location, our own team over there. And there's a strong possibility that one day you could actually see GraceKennedy operating Western Union in Ghana because of that relationship that we have with Western Union. So the answer to that question is yes, we are in the Caribbean. We are hoping to announce very shortly that we're going to be operating in Bahamas. And we think that we have been in the business for 26 years. We have a really, really core competence in the money services business. And we're going to be looking at any opportunity to continue to expand with our partners, Western Union. Is the company pleased with its decision to go through with a stock split? Frank, I think you're the best man for that one.
Sure, thanks, Don. Yes, we are very pleased with the decision to go through with the stock split. As investors will recall, we had explained that we feel that the subdivision of the shares through the stock split would lead to an increased liquidity in the trading of the stock, and it would allow for a widening of the company's ownership base, as more persons would be able to invest in the company's stock. We anticipate from that greater trading activity in the stock, and ultimately we think that augurs well for the valuation of the stock. As I indicated earlier, on the back of very good profit performance for the year, we have seen our stock price going up over 50%. This is compared to the JSE main index, which is up about 12.5% year to date, and the overall JSE index up about 15–16%. So we are pleased with the performance of the stock for the year so far.
This person is obviously a high-low shopper. Don, the high-low store is looking nice, nice, nice. Well, first of all, thank you very much for that. We have invested quite a bit of funds in terms of renovating our high-low stores. So we have done Manor Park, Barbican, well, Ligony was an acquisition. As I said, Wehby, we're going to be opening Wehby tomorrow afternoon, and then Portmore will be next, and then we'll move on from there. One of the things that we have said as an executive team and as a board, if you're going to be in food retail, you have to do it properly and you have to invest behind it. So our objective is to make high-low a world-class shopping experience, and based on your nice, I think we are on the journey to doing that. So thank you very much. I really appreciate that positive feedback. Can you provide an update on the building of our new corporate headquarters? Okay, so where we are now, and I invite you to drive by downtown Kingston to see our new headquarters. A lot of work is happening now as we speak. Officially, we expect to start serious construction January 2017. The project is scheduled to be completed by November 2018. I just want to clarify about the building. So the first of all is that the building, our corporate headquarters will be housed there, but it's a bigger strategy for the GraceKennedy Group in terms of the building. What is happening that our Western Union franchise, as you know, is located in 11 countries. We have offices in New Kingston, which we don't own, so we are paying rent. The strategy for us is to actually own our own building and relocate from New Kingston to downtown Kingston with all our Western Union franchise. And we're also looking at the possibility of consolidating some of the back office or the shared services from other islands into Jamaica. So that's something, again, that we are quite pleased about. So Michael Ranglin, our project manager, is very focused on it, and we are really hoping to move into our new location November 2018. It's a huge investment for the GraceKennedy Group in Jamaica. It's $25 million US that we'll be investing. And as my past chairman said, what is good for GraceKennedy is good for Jamaica, or vice versa. Given recent investments in LHC and the continued expansion in the UK, what are we expecting that GraceKennedy will achieve its 2020 vision? Okay, so one of the areas that we have been focusing on in terms of growth is that of, and Frank mentioned it earlier in his presentation, 15% of the revenues in 3 different continents. We really have to manage our expectations for Africa. There's an 86% growth there, but I think in terms of by 2020, the required growth rate to give us that 15% in that continent is going to be very challenging. So as a team, in fact, we're going into a strategic retreat on Wednesday, Thursday to discuss how do we expand in Africa, and if so, what are the required resources, both capital and human resources. We'll make a decision from there, go to our board, and then we'll share it with our shareholders in terms of the way forward. But I guess the main message to the investors is that we have to manage expectations in terms of growth in Africa, despite an 86% growth for the first 9 months of this year. But as you'll recognize, the base is low. So that is something that we'll have to manage and monitor very carefully. We haven't heard much about GICS. Well, it's not GICS anymore, it's GKI. We renamed it last year in the Caribbean region. How are the efforts to expand in the insurance segment in the region going? It is going exceptionally well. We are now registered in a number of islands, but our strategy for the insurance expansion is not a brick and mortar strategy. We're going to be expanding using technology. You'll recall in my earlier presentation where I said GKG Online, we now have 1,000 customers in Jamaica, and that's relatively new. Our strategy for the Caribbean is actually to use technology to expand throughout the Caribbean. So we are having discussions with a number of regulators in the various islands, including Trinidad, Guyana, and the OECS, to see what is the best way to expand. But we have actually registered in a number of the smaller islands before. So it's going well, and we expect during the first quarter of next year, we'll make some announcements. Remember that we have an investment in St. Lucia, EC Global, which we now own about 89%, and that is the vehicle that we'll primarily be using for further expansion in the Caribbean. This is getting really interesting. A lot of questions. Thank you very much, listeners. We really appreciate the questions. Is mobile banking likely to compete with remittances business in the medium term? If so, without giving away strategic secrets, is the company preparing? Well, the strategic secret is that the company is preparing. I think actually it's going to be more complementary than competing. As you can see from the GraceKennedy strategy in terms of agency banking and other products that we're going to be announcing very shortly, we believe that that is going to be complementary, especially if you're structured like a GraceKennedy, where you have a commercial bank and a money services business working together. A lot of the new products that is going to be offered through mobile banking, obviously you're going to need regulatory approval, and that we'll have to see how that goes. But I think it's going to work together for the GraceKennedy Group in terms of growing our financial services in a big way. If you remember the last note, I saw a note about financial inclusion in terms of competing in the commercial banking sector and so. Well, my opinion, to be honest with you, is that agency banking is probably one of the best ways to have inclusion in terms of banking. But it's more than banking. So our locations in the Western Union locations, the GraceKennedy Money Services location, we're also going to be offering microinsurance as another product in terms of financial inclusion. Okay. Frankie already spoke about de-risking. Oh, there's ROE, Mr. James, this one is directed straight for you. Return on equity. Your return on equity for your last financial year decreased. Can you give us an idea of how you're performing for 2016 and your plans beyond?
Sure, thanks for the question. The ROE, yes, did decrease in the last financial year, but as you see, our profits are significantly up year to date, and therefore we would anticipate that that reflects and will reflect itself in an improved ROE performance for this year. The executive recognizes that there's often a trade-off required between growth and short-term profitability, and some years ago we made the strategic decision to put the company into growth mode. And so you would have seen the impact on our profitability as we reinvested in the business heavily to get that growth. What we're pleased to see in this year is that that investment is paying off, and that's reflecting itself in the strong operating performance that we spoke to earlier in the various businesses.
So Don, at the Ligani opening, you mentioned about digitizing the GraceKennedy Group. Can you expand on that? Well, let me say, the world has changed. Digitization is not something nice to do. It's something that we have to do as a GraceKennedy Group if we're going to remain relevant going forward. Think about it this way. The largest taxi company in the world does not own a car. It's Uber. The largest movie company in the world does not own a movie theater. It's Netflix. The largest rental company in the world does not own real estate. It's Airbnb. The world has changed. And GraceKennedy, as a company, we have to embrace technology. And in fact, we are going into retreat about digitizing the GraceKennedy Group to remain relevant going forward. So it's not a nice to do, it's a have to do as we continue to grow this great company. Thank you very much, everyone. I'm getting the signals from my handlers that the time has passed very, very quickly. But I really, really appreciate everyone for joining us. And thank you very much for the questions. They came fast and hard, but we really appreciate that. When you hear from our investors and the general community, it makes us a better management team. If there are any other questions, I would really appreciate it if you could email me at gkinvestor@gkco.com. That's gkinvestor@gkco.com, and we will be happy to answer your questions. Thank you very much, everyone, and have a really, really good day.